What is up, YouTube? This is the Working Investor. In this video, I'm going to go over where I'm at right now in the goal of hitting $3,000 a month. My goal was initially $1,000 a month, bumped it up to $3,000 a month. I think I'm going to have to eventually keep bumping up that goal. So we're going to talk about what I made. We'll talk about total return on yield on capital. We're going to go through all my investments, and we'll talk about my clone. You know, I have a clone. So basically, not a real clone, but I have a financial clone. How many of you guys wish that you could clone yourself and send your clone to go to work and make money for you? And we're going to see how much my theoretical clone is making for me. So for the month of November, I made a total of, it's not going in here, there we go, $7,736.02. I made the mistake last month by not waiting until the last day, because sometimes I have some options I put on and off, so that's why there may be a little bit of discrepancy. So this is the most accurate number, 4,444. So for this month, it's $7,736.02. This is mostly dividends, high yield dividends, some option trades, and this pretty much beat the goal of $3,000 a month. I thought maybe I'll hit $3,000 a month at the end of the year, and of course hit it much sooner. The capital, I looked at the capital, how much I started off at the beginning of the month. I'm starting to track it, and it was about $109,000 in the account. So if you just, see how much I made in income compared to the capital, it comes out to be 86%. But the caveat is that I'm using currently around 24%. I'm using $24,000 a margin. So really, it's not really a accurate depiction. Maybe it's yield on capital with margin, so it's really not an accurate percent. It's going to be completely honest. So for the year, as you can see, $22,862.35. Monthly average, $25.40. And you could see the trend where it's going up, except for August, which was a bad month, where it went down. So let's take a look right now and look at the dividend tracker. So according to the dividend tracker, I'm going with a lower number. So I'm going to go with portfolio dashboard. So it says 9,000 fire. I don't know. Dashboard, $8,524.18. They're saying that my yield on cost is $72.13. Dividend yield is $69.47. So I'm up in a lot of positions, hence my yield on cost is elevated. I don't have $147,000 total. I have around 122 right now. Currently, I'm using some margin. That's why you see the total value, which includes the margin as well. And I'll show you all my holdings right now. And please bear in mind, as I show you my holdings in my account, this is my personal journey, my risk tolerance that makes sense for me. I'm not here to give you any financial advice. I'm just here to share the journey with you guys. And you need to make decisions that make sense for you. You need to speak to a professional tax advisor, a lawyer, and a financial advisor, and every type of advisor you need, but I'm not it. So yeah, buying power is just how much margin I have left to use. So I have my biggest holding, and I'm doing it by equity, is AIPI, 3,164 shares. I've been buying consistently every ex-dividend date. I kind of buy in the ex-dividend date a certain chunk, and then I want to see how they perform. And then if they do perform well, I decide to enter more on the next month, so on and so forth. I'm trying to build up GIAX and AIPI. Those are the two ones I'm really trying to build up. GIAX, I have it up to 1,400 shares. You're going to notice that I have RDTE and QDTE, but what happened to XDTE? So XDTE, I made a decision to sell all the shares of XDTE. Of course, I was up a little bit, so I sold it for a bit of a profit. I have no beef with XDTE. I actually like that fund very much. I actually intend on purchasing it again sometime in the future. The only concern is that I'm trying to really boost my account quickly with high dividend yield. Ideally, of course, having a high yield on cost. And XDTE was 15% to 18% maybe. It came out to be somewhere in that range of the dividend return. I'm looking for something with at least 20%. I know I sound very spoiled, because 15% to 18% used to be one of the best dividends you can get out there in the market. And I have nothing wrong, nothing against it. It's an amazing fund. I like it very much, personally. And I may go back into it once I hit a certain, income goal. So, sorry I jumped over AIPI. So here you could see what happened to FEPI. What happened to FEPI? So I'm sure you guys saw in my video a while back that, again, I have no beef with FEPI. I basically merged FEPI together with AIPI into one $10,000 fund. So it's like a Super Saiyan, if you guys ever watched Dragon Ball Z. So basically, the reason again is because, just in summary, AIPI has targets a 35% yield. They're very consistent, and FEPI is less than that. It was like a 24.8% yield. So I know what 20% is my cutoff, but I looked through the holdings of FEPI and AIPI. AIPI had almost everything that FEPI had. If I recall correctly, it didn't have Netflix or Tesla, but other than that, it had almost everything else, plus more. And I'm more comfortable right now with AIPI. And other parameters why I sold FEPI was because they underperformed relative to the NASDAQ, relative to the SPY. AIPI beat the indexes. Hence, again, I'm not knocking it. It's just, for me, I made my decision, and those are my decisions. So RDTE, QDTE from the Roundhill products. So if you notice, I'm trying to diversify a little bit, not just with different types of funds, basket of funds, but also different types of fund managers managing the funds. So you could see here I have some Yield Max, I got some Roundhill, I got some Rec shares. Those are the three types and I have Nicholas funds, you'll see later on. So now I have some of my individual funds, the Tesla fund, about $10,000, almost $11,000 in the position. In NVIDIA, again, my goals were around 10K each, but some of them grew. I kind of broke my rule. I kind of bought a little more if they went down the dip, but I'm kind of pretty much up on almost all of them. NVIDIA, I'm like right at my cost basis. You'll see I'm right at the cost basis right now. NVIDIA is 24.85. My average cost is 24.88. So it's that's the only one that's slightly below my cost basis. FEPI, almost $6,000. Misty, it grew a lot. My cost basis is like $29.96. It's trading around 30. I don't even know where, 34, 35. So I'm up around $2,000 in the position. AMZ, 370 shares. I'm up over 100 shares since last month. GIAX is another company. This is a very diversified fund. I did make a video between GIAX and SPYT. I could link in my description the videos between GIAX and SPYT, and the one that I did between FEPI and AIPI. And then I have SQUI, or basically square or block. That was a new position. I'm just doing like a toe in the water type of position. I like the fund. I've done some research on it. Seems promising. The yield, a lot of things check off my checklist, but I feel like I have to do a lot more research if I want to get into this like really heavily. So I just did this like kind of toe in the water type of position, just 130 shares, less than 3K total. This is actually inaccurate, the P&L. So anyways, so let's go into, so these are my holdings. Again, don't copy me. This is my personal journey. Let's go into my special clone worker. Let's see how they're doing. Here I have a spreadsheet, and basically I put in roughly how much cash I have invested. This is my own cash plus a little bit of margin that I'm using. I'm saying, normally I'd say I like to target around 60% return, which is 5% a month. But as you saw right now my yield is around 77, somewhere in the 70 range. So let's say 0.06. So 0.06% a month. If you see in the second line, if you analyze it, it's 72% analyze, return, because your yield on cost is your superpower. That tells you exactly like how fast you're going to accelerate. It's your acceleration power, how fast to get from point A to point B. So my monthly gross somewhere, should be somewhere in the 8,000s. So let's just be a little more conservative. We'll go to 0.5, 60% total return. So 7,300. Yearly gross $88,000. Again, this is obviously you saw that I'm really lowballing it a little bit. Maybe it's good because I got to take off taxes too. So my extra worker is making a little bit. Used to make like less than minimum wage. Now my extra worker is making, more than minimum wage. A couple times more than minimum wage. Depending on what state you're in. So $42.40. And if you want to go with the 72% annualized return, which is close to what I'm actually doing, it's actually $50. So somewhere between $42 and $50. So the worker that I send out every day that's making this in gross income is happy. Now here you can see if you put $0 in every year, or if you add, if I just let this thing reinvest in itself without putting another dollar from any paycheck in 1 year, the balance will go up to $252,000. That includes, I guess, the margin. But the income should go up in about a year, if you just compound it to like 15 grand. Again, I like to be a little bit more on but this doesn't include taxes also. So let's say 11 grand, 11,000, maybe 2 years, 18,000. Guys, it gets crazy after you get to 4 or 5 years, 3 years, the green is the gross that would generate around 30,000. 4 years it's 48,000. 5 years you're talking about 77K. 6 years you're talking about north of 100K in 6 years. Again, you need to take off the drag. What do I call the drag? Tax drag. About 30% roughly, depending on who you are. I'm just generalizing roughly 30%. Maybe more, maybe less, I don't know. But so obviously maybe you got to add an extra year or something. So year 6, year 7, somewhere in that range, if this thing keeps going. Anyways, yes, this is the Working Investor over and out. I hope you guys were thoroughly entertained by looking at my funny portfolio over here. It's just crazy. I keep pinching myself because, even if, let's say, I went into, real estate, for 122K, that's maybe the down payment, for, let's say, a $500,000 property. What is that? One door. You're not going to expect to make $7,000 a month on a door gross, before expenses, $8,000 a month gross. And you can't compound that so easily. You know what I mean? You have to save up again until you get the next property, till the next down payment, and get to the second door, the third door. This is crazy. Like, maybe you're making a few $100 a month net. Like I remember when I was running the numbers on real estate deals, I was like, oh, if I make just even a cash flow of $100, $200, that'll be awesome. I just have to pinch myself. Sometimes I feel like it's too good to be true, and there's like a gotcha at some point. There are some vulnerabilities with option-based ETFs. I may talk about another video. It's called the whipsaw effect. That could be a vulnerability. But we could talk about that at a different time. Anyways, I hope you guys had fun. This is the Working Investor over and out. I hope you guys have a wonderful trading day.